Welcome to Stock Talk on July 16th. One question that you all might be asking is, well, did we make a high in all the indices today? Well, the answer is no. We pulled back just a little bit. So let's take a look at the charts right now. This is the S&P 500 2-year daily time frame. But if we just zoom in a little bit, you can see that today we came back a little bit, which I said in the last video that it would not be too unusual for that to happen because we've had a lengthy run and we can consolidate by pulling back a little bit before that next push higher. What is this reminiscent of? It's almost reminiscent of something like this pattern here, and we can potentially have a similar pattern in the next few days before that next push higher. Regardless, who is in control right now? Is it the bulls or the bears? Well, you have to give it that the bullish case is playing out. We're making all-time highs. Even though we haven't done it today, this is still a bullish chart pattern until we have something else to work with. So we don't see any signs of reversal. If we see a reversal sign, the first thing I would like to see is us closing below the 20-period moving average, which we don't see yet. So until then, it has to be bullish until said otherwise. And this 20-period moving average is at a pretty critical value, I think, once we get up there, around 297.50. So this is curving upwards. We have a small gap in this area. Look for that area to act as support if we get there. But this is a bullish chart pattern. So, I am open to both the bullish and the bearish case. But in order to establish the bearish case, first of all, we need to see some reversal sign. When you look at these series of candles and us making all-time highs in the recent days, we don't see any reversal signs. So we can't place much emphasis on the bearish case, at least in the short term. So one thing is, don't guess at what the high is, because if you're guessing at where the high potential will be, it will probably wrong and continue move on higher. So that's just something to keep in mind of when we're looking at the S&P 500 chart or any chart in general. Oh, by the way, thanks everyone for subscribing to the channel. So keep on subscribing if you enjoy this content. Well, if you've already subscribed once, then you're already done. But if you're new to here, please hit the subscribe button and you get notifications on when I post a video. Let's take a look at volatility. Does volatility support the fact that markets are moving in the way that we should? So let's take a look at TVIX. You can see that one pattern that I explained in the past video was how a lower high or a lower low shows a downtrending pattern. So going long on a downtrending pattern might not be the best strategy. The reason why I point out these things is that TVIX is volatility. So during volatile times in which we have major swings up and down, this is a good option to explore. But when we don't have that volatility, this is a shorting instrument. In terms of shorting TVIX, is not going long is a nicer play. What do we see here? Well, we see a continuous lower low, right? And when we look at this chart pattern, you can see that this trend continues to be lower. And today we made another all-time low for TVIX. So this chart pattern continues to play out to the downside. I expect more downside in the coming days until we can see some sort of reversal by broad markets, right? Without all the broad markets or all the indices collapsing, TVIX will have a very difficult time getting above even the 20-period moving average. So this continues to be a downtrending pattern. We explored the major tops last video of how this is reminiscent of a downtrend. We still see that today. That picture has not changed. So that's TVIX. Okay, and let's take a look at crude oil. So here's crude oil right now. We talked about in the last video how crude oil has a good chance. It's possible how we were coming back down to retest the moving averages, and now what you can see here is we're below the major moving averages. So for what it's worth, it is bearish until short-term bearish until we can get above those moving averages again. And that moving average is going to be around the price point of $58. So far, we got below today. So right now, we're looking at a support level of around 56.55. If we can get above this $58 level, that is bullish for crude oil. If we're below, we're probably going to be more bearish for crude oil. So, and that is the chart pattern we see right now in the short term. In the long term, it might still be okay, but we'll have to take this, like all charts, a day at a time. Natural gas. So here is natural gas. You can see that today we had a move towards the downside and a pretty dramatic move to the downside. Again, I would not be surprised if we somehow formed a bottom in the next few days and started reversing. But you can see here what's been happening is the 50-period moving average curving lower. And you can see that we got rejected off the 50-period yesterday, and it played out to the downside today. Now, is this the end for natural gas? So here's the line in the sand, in my opinion. If we close above the 20-period moving average, I would denote that as bullish for natural gas. The reason here is this. We close below, so if we have the bulls getting us above, back above the 20-period moving average, that would be bullish. That level is currently at 2.364. Anything below, there might be some potential downside, but we can get above the 20 in the next few days. So that's just something to keep in mind of for natural gas. Gold futures hasn't really changed. This analysis might not change for a while. It's still consolidating after a pretty lengthy move. This move was over a 6% to the upside. Now it's consolidating to the right. It's a bullish chart pattern, but it hasn't played out just yet. All right, let's take a look at your comments. Again, all of you can post comments down below because I tackle your tickers. So if you post a ticker or just post a comment about broad markets or anything, I'll respond to you either in a video or in the comments, and we'll take a look at it together. So it's fun, it's interactive, we communicate with each other, and if you want more communication, I have a group. So take a look at the group. It's in the description, right? Click on that link. You'll see an overview of what we do, how we trade, what tickers I like, what tickers I don't like, so on and so forth. All right, so Andre, did you buy AMD when it dropped to 16 like that crazy guy said? So I don't know which crazy guy you're talking about, but with AMD, I have been in and out of AMD in the past, but I have not been trading it for the past like half year. So here is AMD. I was not trading it here. I had some other chart patterns that I liked more than AMD. Obviously, AMD has played out quite significantly to the upside. It almost looks like AMD has some more room to run, but no, I did not buy in. At 16, maybe I did buy in somewhere over here, but I did not buy in over here. So I can tell you, I did not buy in. I was not participating in any of this move here, but AMD looks pretty strong. Thank you for your ticker, Eric. Glad you're posting again. I'm sure we'll bring more people to the course. Yeah, and you guys don't have to. You can just take a look at it and see if the course interests you, but you don't have to join the course. You can just take a look at these videos. I'm happy everyone. If you all are just watching these videos, I'm good with it. And especially if you find this information helpful, you put a like. Anything is helpful. So thanks, Eric, for that comment. Long on SD, thanks for your analysis of SQ. I was looking at SYMC. I think this ticker is on my list here. SYMC. There is a lot of volatility in the name due to talks with Broadcom, but technically, how would you say the chart's assuming a deal does not happen? All right, so interesting chart pattern. So what we can see here is I would like to place emphasis on the larger time span, and here's the larger time span, right? We have a higher high line, which is a definitive resistance. We got rejected again, and regardless of what news items happened, maybe the deal didn't happen. You said with Broadcom, or talks with Broadcom, but this was a gap down, right, at resistance, which is what we expect, or we expect retracements off of the resistance. So that is a resistance. Where's their support area? Well, your support zone has to be this bottom half. So anything between $17 and $18 says that, hey, that's the support area. There might be some potential upside to this. For now, we're nearing and meddling with the middle. We have a gap fill area. There's a major gap all the way up towards $25. But is the risk worth taking for a gap fill? Maybe not, right? Because we're nearing the upper end of where we could potentially go. So that's something to keep an eye on for Semantic. The price action shows us we're a little bit elevated. So just got to keep that in mind. Thanks, Long SD. And then Rico Giants, I'm looking to get into AMD, looking for a good entry point. So a lot of you guys are interested in AMD. Interesting. So yeah, AMD breaking out of this pattern. I see why y'all are interested. What stocks are you holding at the moment? Well, if you want to know the list of stocks that I like, at least, I have a list in the course. So on Discord, I have a list of the tickers that I like currently. So you can check that out if you're in the group. Otherwise, when you give me all these tickers, I tell you some of the chart patterns I like, right? For example, someone mentioned Square last time. I said I like Square in terms of this chart pattern. It's a bull move followed by a long period of consolidation, and looks like we're trying to make another push in the recent days. And well, right now we're a little bit overstretched, but we can make another push, and that's some chart patterns I like. Maybe you can get some insights on what kind of tickers I like as well. So thank you very much for watching this video. Hope you have a great day, and I will see everyone, of course, very soon in the near future for another video.